Right, so one thing I was going to do is I really like the Dow. It's a really good technical market. The volumes are really nice, and it behaves in a way that is fairly predictable. So what I was going to do is just piece together what I was looking at this week, and then we can take it from there. So one of the key things that I really like to look at is the gap. So this red dotted line up here at the top is the Friday close. I've got 25,788 on this particular chart package, and you can see this is a 30-minute chart, and that's all I've got apart from the stochastics at the bottom. So clearly we are in a really nice sell market. So something like the stochastics is one of many tools that you can use. But a couple of things that I was doing here is, first of all, just having a look at, if you fib the gap to the low, markets are random, so how can you try and pin these prices down and then try and get a trend-like entry that you want? Okay, so if you've got a price down here from Monday close, Monday's low, and you've got the gap, then you can start to piece this together. With fibs in a downtrend, we're looking at selling highs. If you're looking at selling highs, then let's look at the zones. So this was the main gap itself, the main gap zone from the Sunday Asian Open. And so you can see immediately from the Monday low and the Asian Open, this market is liking this fib level. So ideally, it would have been great to short. I was looking to short at 25,250, and of course we've not got near there. But what we have got is, now we've got some levels that we can watch. So basically what's happened today in the London session is, so obviously what are the key levels? The key levels are the 50%, and that's what London has hit this morning. So if you were right on the case, and I wasn't watching this at this time this morning, but if you're right on the case, that 24,620 area was a fantastic place to get short in hindsight. Then we had the US Open, and the first bar of the US market was here. So what have we done? We've rejected this 23,350 fib level, and at the moment we look as if we are heading for 23,460. So any higher closes is being completely rejected, and this is heading south. I did actually attempt, a buy here around about this area here because of this potential buy signal, but what I did was I just took a very small position, throwaway position. It didn't work, so I walked away from it. In the meantime, this is still climbing lower. So although I wasn't looking for a bottom, I was prepared to risk a small amount of capital just to see if that could hold up. In the meantime, we are clearly, even this 30-minute bar from the open was, when we did get a bounce, and these are incredible bounces. I mean, that's bounced from 865 to 240, so that's 400 pip bounce. Amazing. Now what I have been doing, I have been making money on the upside as well. I mean, if you've got some low stochastics and some buy signals, yesterday, this was a couple of hours after the open. I generally find if the market's going to reverse, it's going to do it in the first period of the open. That's my sort of rule of thumb. If you're looking at the first 1 to 2 hours, if you get any buy signals in the first 1 to 2 hours, then you've got the potential for a reversal. If you don't get that, if you continue to get the lower closes, then keep shorting. Okay, so this was originally my target to short. I didn't get it. However, we got some sell signals up here on Tuesday European time, and we got some. So the European Open has been a good opportunity to sell this market more than the US Open. So whereas I do sometimes trade this in the European session, but I tend to just keep my trading out of the general noise you tend to get in between the cash sessions, and I just stick to the cash sessions. Okay, so this is what I also like is I think if you're going to get a big push to the upside, then you need to find a squeeze. So for example, if you are looking at this area here and the support, and this was a big move up, yesterday's low pretty much duplicated that big push up that we had on actually in the Asian session on Monday. And in fact, what we are doing at the moment is, if I stretch that across, we're in the same zone. So if in the last hour of the day we find ourselves above 770, then we might do another wave to the upside. Keep an eye on that. In the meantime, any little high is selling. Okay, so let me just clear this up a bit, because I made it really messy. So like I said, the first point of interest was that fib from the gap to the Monday low, and didn't get the level I wanted to short, but in the meantime the market was starting to short at that level, and of course as soon as the first half an hour gave us a lovely rejection of the 350 level, and here we are potentially heading back down again. So that's a good way to try and piece the market together, try and break away from the noise that you're getting, and concentrate on levels that you can see based on this gap strategy. Okay, let's take that and look at the DAX, and let's do the same thing on the DAX. Let's start again. The 30-minute chart, the gap Friday close was up there. The Monday low, so it's not too dissimilar from the Dow. So we got a nice sell signal up there at Tuesday, a couple of hours after the London Open. So we're stepping down, and last night we crashed into the 50%, and this morning at reversal time we lost our footing on that level. So we've got three, so we were stepping down on this one. That was one fib level, 50%, the next level down. So if we can't hold this level into the second half of this week, well, we're in the second half of this week, the last 2 days of the week, if we can't hold that level 10,160, we could be heading for 10,000 and lower. Okay, if we're going to step down. So the next level I would watch tomorrow is any recovery to 10.5. Tomorrow is a potential short for at least a move down to 160, and who knows, maybe even 10,000. Okay, so this is, in a way, this is cleaner than the Dow, because this is stepping down in a much simpler way. And if this was to, so for this to have been bullish, what I will look for is there's the structural breakdown this morning. I will have looked to this to close above 10,700, 750, and then to start potentially go back to the gap fill. But this market is not interested in the upside at all. So that's one way in which you could step this down. Okay, so what I've done here is broken this down in terms of the gap, the fib levels, the structure that you've got here, and then targeting levels to look to get into this trade, just using a 30-minute chart. 30-minute signals on the whole are a lot more reliable, a lot better than 15-minute. It depends how you use your 15-minute chart. For those of you who know me, we've got a very specific way of using a 15-minute chart, which we use in our live trading room. Okay, anybody else got a good system that they apply? Any different method for this? Let's look at, while you're thinking about that and answering me, I'll look at some Forex. Let's look at the euro, because the euro has been really interesting. Okay, same thing. So we've got a gap here. We actually gapped up. So now this is much more interesting for me. This is a typical gap strategy. The indices are so bearish at the moment. They're not behaving in a normal gap strategy. Now my normal gap strategy is this: if you've gapped up, I would ordinarily look for the market to come back and backfill the gap and then start buying. It normally overshoots as well. Typically it will overshoot. So I'm not at all surprised to see that coming, but it's actually come back to the Friday level anyway. So if you are a Forex trader, this is potentially a very interesting area here. I've got 3 touches of this. So if we now subsequently break above this area here, this could at least go back up to that high and more. This is ordinarily what I would, on a normal trading day or week in the Dow, if you've got the same thing applies. Gaps down, there's your Friday price, there's your Sunday Asian Open. Ideally, you would want it to fill the gap a little bit more, and then you get short and then it rotates back to the trend. We're just not getting that. I think we did get this in, I think it was the January 2018 hard sell, hard drop. I think we did exactly this. We gap down, closed the gap and some more, and then got a really nice drop through to January, March. I'm sure it was January 18. I'll go and check in a minute. But we're just not getting that. It's too bearish. Once these markets are gapping down, the markets are just selling anything that is pushing up. So we got any Forex traders in the room? So if I now take that off, so if this is the common support in the euro US dollar, this is the level. If this gap strategy is going to work, we've got to close above this 128.5, and then if you subsequently get that breaking above that level there, I would hold it. Okay. In the meantime, 30-minute. Anybody use 30-minute charts? A nice sell signal there at late Euro session, end of the Euro day. This obviously was a great place to short if you were trading this morning. Okay. You've been shorting Euro US, okay. Yeah, well, fair enough. Been some good signals. And so Monday, end of the London day, lunchtime yesterday, and breakfast and lunchtime in Europe today. Let's take another one. Let's look at oil. I've spent very little time looking at oil at the moment. Let's run the same principle. I'll just use a black line. There's the gap. There's the Monday low. And there's the upper zone and the high of the inner zone. And that's the one they picked to sell, 36.38 in oil, and that was overnight. You can see why I'm not touching it. The market's done its job. It's yanked it down, and subsequent highs are selling. But it's so low. It's so ridiculously cheap. There's not much price action on it. Okay, so this one way of obviously there's a lot of noise in a normal market anyway, but obviously we've got a lot more noise in this kind of market, a lot more volatility. So one way that you can try and pull back from that and just try and get your head around where the potential levels are in this market is to just think about what's happening from the Friday close to the Monday open, and in subsequent parts of the week as the week unfolds. Okay, so let's look at anybody trade intra rather than day trading. Does anybody trade intra week in the room? You all day traders? Okay. If you are obviously with a market with this volatile, it's not a bad idea to stick a trade on and then leave it. This is interesting. What I've done here is, anybody heard of pinball Elliott wave? Pinball Elliott wave. Okay. What this is once you've got a fib level, once you've had a move, let me push this back up. There's the initial move down to February 28 at 24,680. What I've done here is move the fib from, once the C wave's finished, once the 5 and 3 wave correction's finished, if you move the fib to the start of to the push up in that C wave, then you can actually see the way they are using these fibs. So the next target level is 23,360. So it's possible we could come all the way down there even today. I've had a huge drop so far, and there's only an hour and 40 left to trade. So that's a big ask, but this is an incredible volatile market, so it could well do it. Okay. Anybody trade any other markets? Have we got any Bitcoin traders here? Let's look at some of these daily charts and pick our way through the daily charts. So last week, actually this week, I was looking for, crazy me, but I thought we might even come and touch 26,400 this week, which was the place I was looking to get short, but we didn't do that. Looking for the weekend, I realised this was a short covering bounce, not a potential reversal. In fact, we closed by the 50%. But I was hoping to crash into that 26,400 and then get short and come down to these levels. So if we close like this today, then 2400 or 24.2 is a potential place to get short, to see if we can come down to 22.5 ultimately. All depends. I mean, it's going to complicate things if we do a 350 pip reversal into the close and close above that 24,000. That changes things. But if we close down here, then I would look for that 24. I would look for that level there. That's an incredible short. Anybody still short this? Okay, so now let's look at how you can handle the open again. So let's look at the Dow at the open today. So this is the first 10-minute bar of the open. You can see at an instance we crashed right into a lot of resistance. And you can note that this pullback at 4:20 UK time was just a retracement, which is subsequently it's still working. Normally, if I get a retracement like that, I would hold it into the close. That tends to be, once these markets have set the tone for the day, I would not look for reversals. I would just continually sell any highs. Okay, let's have a look at, I very rarely look at the Forex for the open. Let's have a look at the Forex for today's open. Okay, so they took it in they pushed it either side of the open range today. So here is the 8 o'clock London Open. It shoved it one way, shoved it the other way, and ultimately sold it. It's worth looking at the 7 o'clock European Open. And I've messed up the timing today, guys. I'm sorry. I know some of you are turning up at the right time. That's my fault. I normally open this at 6 o'clock, but for some reason I put 6:30 on the time. So there's the European Open on the Euro US. So all London did was take it back into the European Open range, almost got to the halfway line, and then there's your little squeeze. I mentioned squeezes not so long ago. If you get a squeeze pattern like that, where you break down from a structure, get short and stay short, and of course vice versa if you get that on the long side, if you see that on the long side. Okay, so that's how I would handle the open if I was trading that. Actually, this went back into here in the as we headed towards the US Open. Okay, so The other aspect of this is something that's a key part of my trading is Elliott wave. I keep mentioning this every week, but let's just have a look at how Elliott wave applied to this. All right, let's look at a bigger time frame. Let's go back to a 30-minute. Wow, this is in this sort of environment, you'd expect the dollars are safe havens, the dollars are getting bought. So this gap up has just been used as an opportunity to sell into at this stage. But right, let's talk about Elliott wave for a moment. So I think, to me, Elliott wave, and if you combine Elliott wave and fibs, then I think you've got a really, really good, strong sort of toolbox. So initially we had, I would count this as wave 1 in this particular time frame in this chart. I'll count that as wave 2. And then, as far as I'm concerned, we're still potentially in wave 3, unless, of course, that closes above this level here. So if we then, so I said to you, if you apply fibs, you can, and Elliott wave, you can end up with a good system. Let's have a look at how that first wave reacted to the fibs. So if that's the end of the first wave, and so this, what I've called this sort of beginning of the second wave here, we only got a retracement to the lower zone. So that shows you how weak it is. Ordinarily, I would have wanted to, on a good day, you get a retracement, which is what the Dow's done this week. The indices have done this. The indices have pushed back to the upper zones and sold. This one at the moment is so weak, it's only gone to the higher, the inner zone. So you can use this now as projections. So if this euro really starts to sell, look for 112.14 and potentially 111.13 if that, at the moment it does look as if it's going to sell. Okay, look at the bigger picture. Let's have a look. Wow, yeah, this is why I don't. I'm going to choose a different market because that's really all over the place to me. Let's look at US dollar yen. Okay, that's a bit better. There's a squeeze pattern. So this squeeze pattern in December 18 generated a nice short. And let's take this wave to the downside. So if that's your main wave to the downside, you fib that area there. Obviously, this is important as day traders. This is really useful if you're to try and set yourself up for some bigger moves. You get a little mini structure in there. You can see one thing to note about this wave. We almost did a 100% retracement, not quite, but once we start closing underneath 110, then we quickly get down to these fib levels. And ultimately, come and test the 127 extension. So in terms of waves on this one, so we've had, well, let's take this back. 1, 2, 3, 4, 5. So we just completed a 5-wave pattern on that. So if we now get, we've got a 1-wave correction. If we now get a 2 and a 3-wave correction, the next place to short this one is potentially 107, 108.50 if we get up there. Knock that down to a day trade. Let's look at the, as it's a US pair, let's look at the US Open on this one. Okay, so we're still not doing a lot, not much to go for on that one. Okay, bear with me one moment, just to take a sip of drink. Any questions, any other markets you're interested in before I go through a few other things? Gold, good one. Yeah, let's look at gold. Now, gold, I said last week that I didn't like gold up there. I wouldn't trade it. So obviously we've had, yeah, I was suggesting the path at least resistance was down. Well, that I think I did. Yeah, so we've gone under this. Let's just restructure this because this has got a little bit out of hands, but got a bit messy. So a nice breakout in December last year. So we are way too high up there at the moment. So I think we could potentially come and see 1575 or lower. Wow, we're just getting a massive bounce in the Dow at the moment. If we come down to that 1575 and hold, I would be a buyer. But at the moment that looks as if that is way too top heavy. The main support for this is 1550 is the key pivotal support down there, so we could come all the way back down there. Okay, didn't we day trade this? I would, if I was day trading gold, I wouldn't trade it in anything under a 15-minute chart, personally. It's too thin a market. Yeah, Ken, I don't like Forex much at all. Still see a lot of people talk about Forex. Forex was great. There was a period in the around the credit crunch and in the build up to 09, 2010 plus, where Forex was really good. But personally, Forex is not volatile enough. And why would you trade something that's less volatile when you've got the indices going crazy? That's my attitude towards it. Yeah, like I said, I would trade this gold on a 15-minute chart. So you've got an obvious pin bar up there. 3-wave sell pattern up there with a squeeze pattern. So that was a good sell. If you can see that happening in stochastic and divergence. So stochastics was making a lower high when the gold was making a higher high. 3 tests of that. Try and get, if you're going to short it, short as high as you possibly can. And then take it off on support. A lot of support down there at 1757. So that was one way you could trade that. This was, when was this? This was today at 6-7 hours ago. Otherwise, not many trades to go for. How often do you trade? How many trades do you tend to do in gold, Ken? There's my 1 hour chart on the gold. Okay, let's just go. Let's have a quick look at Bitcoin as well, in case anybody's at Bitcoin. I talked about Bitcoin falling over last week, definitely. Yeah. So we pushed up last Friday. Did a last little bounce, and we are subsequently looking lower. So what's the target for Bitcoin? What can Bitcoin do in the short to medium term? If Bitcoin comes down to this, now this zone here, let me just extend this zone here. This is a massive level for Bitcoin. This is a good one for Elliott wave, actually. Let's go. We've got 1, 2, 3, 4, 5. 1, 2, 3. So that's Elliott wave says you get 5 and 3 wave patterns. Once that's complete, then you carry on with another 5 and 3 wave pattern. So if this is a short pattern, then you trade 5 and 3 waves to the downside on that one. And if I copy that rectangle and put that down there, you'll see we got quite close to the same range when we hit the lows in when was that? 18th December. Right, okay, so let's clear all that up. So on pure Elliott wave, if this is, so then we had a 1, 2, 3, 4, 5 wave down and a 1, 2, 3 wave correction. Elliott waves difficult. 1, 2, 3, 4. No, it's not working. It's not working. It doesn't always work. If it doesn't, if a market's not behaving to Elliott wave, then obviously don't use it. It's common sense, isn't it? But when you've got volatility and the market is behaving to Elliott wave, it's a very, very useful tool. Right, let's look at, let's go right back to basics a second and talk about how we day trade the, let's look at the 3-minute chart. How we day trade the, I don't use 3 minutes, but I know it's a clean chart because I don't use it, so that's why I picked it. Right, as we've talked about before, if you have a look, mark your charts up for the open. So that's the open high and the open low. And whichever way you break from that range is your potential direction. So we look good into the open, but that's prior to the open. So we broke down, pushed back to close to the midpoint, and then just started working our way to the downside. So we had a 1, 2, 3, 4, 5, and a 1, 2, 3 wave correction. You can see why it's not worthwhile picking bottoms in this. because it's awful. So if you are day trading something like the Dow, just look for the first, just look for that open period, that open zone, and then trade it in the direction that that is telling you. Okay, now what we do in our live trading room is we have an anchor system. And what that anchor system does is it pinpoints, this is the US Open, that's the US Open. I don't trade the Dow to the London Open, only the US Open. If I was trading the DAX, I would do this in the obviously the London Open, but otherwise I wouldn't. So what we do in the trading room is we have what we call a golden anchor, because what sometimes happens is these markets fly in one direction, move in another direction, and just chop you around. Now this particular day is nice and clean, but you can get a lot of noise in this, and the golden anchor system is hopefully going to keep you out of that. Hence the reason why it's called a golden anchor. We also have a way of handling the intra-week. You've seen me talk about the gap strategy, but the gap strategy obviously can work on the overnight gap as well. Now the gap on this one, was 24,967. Let's go back to the gap on that. So let's put the gap up there, 24,967, 24. Okay, that's roughly, it's 24,968, but that'll do. So the gap strategy for intraday trading says that if you have a range, let's look at so the actual range from the previous day's close to this open was almost to the 510 pips. 510 pips, so it's massive. So in other words, there's a big downforce since this market closed. So that tells you that any highs, if the market's that weak, you would normally look for a partial gap fill. I would normally look for, in this case, I'll just eyeball it, but roughly about 740. But we just didn't get there. So if it's that weak and not prepared to do a partial gap fill, then just look for the break of the initial open range. Okay, so the gap strategy for this particular day is a gap and go. If it's bigger than 100 pips, and obviously this is 510, then it's what we call a gap and go, where you literally just short the high of the open and then hang on, get out if it doesn't work. If it does work, stay in. And you can see all these some of these little pushes. You've got to stay the right side of the trend. Don't try and find a bottom in these markets at the moment, because it's an easy thing to do. But if you are going to do it, trade very, very small size. And if it doesn't work, stop doing it. But otherwise, just once you've got the break, once you've got the direction of the day, just short any highs, because all these little pushes up are actually quite significant. So we've gone from 900 to, yeah, it's 320 plus. So if you miss this move, that's another point. If you miss this move, don't chase the market. wait until it pulls up and then just start shorting highs later in the day if you miss it. Okay, so we covered quite a lot of ground. We've talked about, just recapped from previous sessions about how I trade the open. Trading, yeah, how to handle the markets once they've opened and if you missed a move. We've talked about a lot about gaps, intraday gaps and intra-week gaps, because getting so many of them, they're relevant. And then we've gone through, looked about the fragility of the gold at these highs, the lack of movement in the oil, the fact the euro session is, sorry, not the euro session, the euro US dollar is weak and looks weaker. Even the fact the gap strategy, the gap backfilling of the gap is not working. It's continuing to drop lower at this stage. And Bitcoin looks lower. We've also talked about potential targets for this Dow on that next fib level. And we talked about pinball Elliott wave as well. So we covered a lot of ground. But my recommendation to you is keep things very, very simple, particularly with the volatility we got. Keep things simple. Don't counter trend trade. Don't look for bottoms in these really weak markets. Or if you do, trade very, very small size. And have a look. Do your homework with those 30-minute charts if you really want to look at the bigger picture or the intra-week picture and plot your way through to where these markets could be going. Then look at those 30-minute charts. Any questions? What I was going to do is, if you are interested in our trading room, then come along to scalperschool.co.uk and have a look at we've got a program running next Saturday. Scroll down and look at the program that we got here. 4-hour program. It's recorded, so if for any reason you're not available to attend, you can watch the recording, and you can play it. You'll get a copy of that, so you can run that through again as many times as you like. And of course, you get check sheets to keep you on the right side of the track. Okay, so that's scalperschool.co.uk. Next one is Saturday. Any questions? Thanks a lot, Ken. Yeah, put the word out there. See if we get anybody else interested. Then see if they want to come along. But there's a lot to talk about, isn't there? So it's not hard to find something to extract from these markets, because they are so buoyant at the moment. So here we are, around 10 minutes in the market, and we look as if we're going to find another new session low. 596 is the session low. We look as if we could even get under that at this rate. If we are going to bounce into the last hour, I wouldn't touch it on the long side unless we can start closing above this level here, 23,700. Otherwise, that still looks lower. If we close back on close on the 600, then and we retest 600, that's another potential place where you get in. All right, so that's how I conduct myself in the Dow, particularly, and that's how we clock up our pips. Like I said, there are situations where we just scalp and look for initial moves, and there are other situations where we on a day like today, we had a good reload entry, which is worth just sitting on into the close. Right, I've got no more questions at this stage. Last call for questions. Any other markets you want to look at? Anything else you want to go through at this stage? Or are we just 70 minutes before they close this market? So it's, you can see it's, if we could pull a 10-minute chart up again, 10-minute. It's so these, this is yesterday afternoon's reversal level. That's where we reversed from yesterday, and we're at the moment under that. So pop back above 700, may get a short covering bounce into the close. Otherwise, that is still looking lower. Right, thanks a lot. I'm going to go off for my meal now. Final call for questions. Let me know if you want any more information about the program on Saturday. And otherwise, I will talk to you next week. I'll stick to the 6 o'clock. Rather than confuse everybody with the 6:30, I'll make sure that I stick to the 6 o'clock start next week. So if you want to come along next week, same login. I'll send out the Zoom links again just before, a few hours before we open again. And see you then. So have a good week. Tread carefully, look after your accounts, and see you then. Thanks. Bye.